Aloha, everyone. It looks like that the overbought market conditions are finally ready to rear their ugly head if you're a bull. The Russell 2000 broke down below the recent October lows today on above average volume and with a lot of price velocity. We are now completely rolling over. RSI is moving below the 50 line, so that means that the bears are in control until I start to see the market get oversold and turn and curl up from that oversold level with a lot of great looking stocks or any leading stock consolidating correctly and breaking out. I'm going to be extremely cautious here because we remain extremely overbought on the rest of the market. So keep all of that in mind. Right now, following today's session, I had a lot of 50% sell signals, 100% sell signals, but the vast majority of my new long positions are not failing yet. When that starts to happen, I am going to severely pull it back in new long positions if the market continues to sell off. I won't get any signals. You can't get the setups that you're seeing now are a byproduct of an uptrending market. When the market is downtrending, you're not going to get new long signals. So this evening, I actually have 4 new long signals and a hedge position, but I can tell you honestly, it would not surprise me if they all fail and the TVIX hedge position is the only one that works, because if we get any selling follow through, 3 out of 4 stocks will follow the market. But that being said, SKX, TGB, and KW are in sectors that do good or hold up or don't fall as much in bear markets, so we'll see how it plays out. The one wild card is the last one I'll go over, SBPH. But you have to realize, if the selling follows through tomorrow, which it already is overnight in the overnight futures market, I will pull back in my new long signals immediately. As of right now, with the Russell 2000 going neutral, speculative long positions are off unless the inherent risk is under 5%. Shockingly enough, I do have a good enough setup that was in both of my green BOP scans this evening, and I will be taking that speculative long position as a new long, because it's $1.17 is my limit order, and I cut my losses when it moves below 115, so it hits 114, I'm completely out. That's about a 3% risk in that trade. So that's what I'm looking for right now. Now, right now in the quality long positions, I'll let it have more than 5%, especially if it's lower price like TGB, because TGB is in my lower price perfect speculator scan. But if we continue to sell off tomorrow, I will no longer be taking those longs with a lot of inherent risk in them unless the chart is beautiful, just loaded with green BOP and accumulation and open body candle bars all over the place. And then I will also start to reduce size from whatever the current amount is per trade signal. I'll half it back even more. It's already reduced as it is. And then also, it's just, you're not going to see a whole lot of new long positions if this starts to pick up. So let's just go to the long positions really quick. Don't want to waste too much time. I'm really busy. I got people in town. My girlfriend's parents are in town. So it's going to, no real update on Thursday, and maybe not this weekend. I might have to take this weekend off. I know I'm like the only person in the world that actually, doesn't want to take time off, but whatever. SKX. SKX was in my CanSlim scan. It is a CanSlim quality stock. It was not confirmed in any other scan. I do not like that BOP is going the wrong way, but I love this bullish reversal hammer candle bar right here near the lows of the gap up following earnings. So SKX, since it's extended from the 20-day moving average, only 1% of my account capital when I get long at the close, 31.22. First cut loss, a move below 30.41. 30.40, I'm out half. A move below 30.07 at 30.06, I'm out the second half. So very contained losses. If it doesn't work out, if we gap down tomorrow, I'll probably get a better fill than 31.22. That'll even reduce the losses even more if I'm wrong, but 1% of my account capital there. TGB. TGB was in the perfect speculator scan. I want to show you a zoom 2 chart or a shift 2 chart on telechart. You can see the big move off the October-November lows, but let's just concentrate on the zoom 3 shift 3 chart of TGB. TGB, nice long uptrend, had that nice long base consolidating. This is a shorter handle area, but it's a metal and mining stock. These stocks do well, hold up, pull back less in weaker markets. So even if the market weakens, TGB should be able to do well. If not, clear-cut game plan right here. 222 limit order, 1% of my account capital. You might not want to put that much in and or might just want to watch the trade, not take it, especially in this market. Cash is a position, new traders. You don't always have to trade. If you wait to trade only when everything lines up, you'll not only reduce your commission costs, but you'll increase your win-loss percentage rate, and you'll probably make more money with a smaller account in the long run. With a big account like mine, yeah, it probably pertains to, but my commission cost per trade is so low, it's negligible, especially with the way that I invest now. I trade scared, so I'm not scared to trade. But TGB, 222. First cut loss, a move below 209, 208 right here. And then these lows right here, the ultimate low is 205, so a move below to 204. I will be completely out of TGB 1%. And then KW is the biggest long position of them all. This was in my daily volume surge scan that looks for the stocks making the biggest volume surge moves. Only 23 stocks made that scan this evening. KW was one of them, thanks to this big volume bar here, just like it was back here when it had that volume bar. But Max Green Bop for the past 5+ days, so it made that scan. Obviously, then made my price volume Bop surge scan if it made my most top daily volume surge scan. So 3% of my account capital because of that, especially because it's a REIT stock. These do well in weak markets. More importantly, clear cut levels just below. So I want to get long. Limit order 1945, 3% of my capital. First cut loss, move below 1895, 1890, and then a move below 1890, 1885. And or you could cut all your loss here with a move to below 1895, and or you could use 1890. Me, I'm still going to put half here, because what if it just undercuts it by ½ cent? I get knocked out of half the position before it then runs 10-20%. I would rather go ahead and have half here, even though it's just 5 cents a piece, than have it all here or all there. That's just how I'm going to do it. And then there's SBPH. SBPH, this is extended from the 25 and 10-day moving average. This should be completely eliminated, you would think, but the 50-day moving average is right there. I really like the bullish candle over candle print following the higher close than open the day before. This one is basically a full body candle. Oh, my mouse battery's dying, with a high day close. So it's a very bullish candle over candle hammer pattern. No real volume surge, but we got it the day before. It's basically follow through of that gap up. BOP is falling, but it's still green. But here's the thing. I'm taking the trade because I do like this chart. I like the Zoom 3. I like the Zoom 4. I really like the candle over candle print, the outperformance compared to the rest of the biotech stocks. So I get long. Limit order 1725. It moves below this low right here, 16. I'm out. That's it, 15.99. You may want to have a second cut loss to the 50-day moving average. I might not. But the more important thing is, if it moves below 16, I'm out, especially on an end-of-day basis. I'll be moving up all my stops. But me, probably, if it's only going to be a $2,000 position, I'll probably have half at $15.99, half at the 50-day moving average. But if you're silly enough to not just watch this trade and to take it, please use the 16 level as your final cut loss. And then the one and only trade that I can bless besides KW, because KW has got such a strong looking technical pattern off the lows in a sector that does well even in a bad market, is UVXY, and that's only because I assume everybody's pretty heavily long here. If you are not, and it's not as important, but if you are heavily long, this is the priority position. UVXY limit order. Oh shit, sorry everybody, it's TVIX, because I can't buy UVXY in my retirement account. Interactive Brokers does not let me, and that's where I have it. So I'm going to just go ahead and use TVIX in both of the accounts, the margin and cash. So TVIX long 847, the high of the day. One and only cut loss level 795, so it hits 794. You can be all out. Me, I'll just sell half. Whatever the next low day is out another half. The next low day, half, until I just have one share, and then I sell it all off. And the reason of that is because this is a decaying asset, but whenever it moves, it really moves. And if the market crashes, this is a good hedge. It can run. You could also buy puts on the Russell 2000 if you want. That's also another option. Buying in the money puts on the Russell 2000 that right now are showing low implied volatility. I do not have my options chain up, so I cannot tell you which one. But if you know how to trade options, that's also a play. All right, everyone, I'll see you in the chat room on Wednesday. Trade safe. Cash is also a position. Futures are confirming the selling on Tuesday. Expect more on Wednesday. Aloha.